Now, going into 2026, we knew for a fact that the dollar has already declined by 10% during Trump's first year in his second term. Okay, so as 2026 started, we saw that the dollar has actually gone down a little bit more. It actually took out the low of 2025, and that has been made worse by the comment by President Trump saying that he is okay with the dollar going lower. Okay, and we also saw the week before that there was some coordination in the foreign exchange market as far as the Japanese yen and the US dollar is concerned. The Bank of Japan has not officially intervened in the currency markets, but they have been checking rates. Now, checking rate is always the prelude to an actual intervention. Okay, and this has been supported by the Federal Reserve branch of the New York branch, also checking rates. So that implies there is some kind of coordination between the two central banks. So that has resulted in the dollar going lower. So what we are seeing here is that there is exit agreement to allow the dollar to come off further against the Japanese yen. Okay, so it allows the yen to strengthen. Okay, without any formal intervention by the Bank of Japan. Okay, here is the dollar index. You can see that the dollar index has hit a, a situation in which I think it may have already registered the low. Okay, 95.55 is just a hairbreadth away from my target of 94 or 95. Okay, only 55 points. And it was close enough because I do see an equality move from 114.80 all the way to 99.58 with a rebound to 110.18. And then finally, the last attempt to go lower was actually arrested at 95.55. So technically, it may actually have ended. So going forward, the possibility that the dollar may reverse is a real possibility. A lot of people are still look in the same frame of mind, thinking that the dollar continues to weaken. Technically speaking, that may not be the case going forward. There are signs that the dollar index may have been a precursor to a quite sizable rebound in dollar. So if I'm right, okay, the market has come down from 114.80 or in a very neat three-way textbook kind of decline. And if I'm right, this is the larger degree three wave. Okay, the low is at 89.2. So beside this down move in the three wave, we are looking at the higher degree three wave rebound from the low of 89.2. If this is correct, from the low of 95.55, it may actually extend all the way to 121.10 at least. Okay, so there's a big, huge possibility here, and nobody knows for sure how long it will take. This one, the first time it moved from 89.2 to 114.8, it took about 2 years. Okay, for all we know, it could be a 2 years rally in the dollar going forward. Could that be a possibility? Never say never. Okay, one of the possible catalysts which I can think of is capital flight from Europe. Okay, so if there is capital flight from Europe, maybe because of a widening of the war between Ukraine and Russia, then capital may flee Europe, and logically they will traditionally flee towards America. So that would actually strengthen the dollar going forward. Okay, so if this is the case, I am beginning to look at buying dollar. Okay, I am of the opinion that the low may be already in place, but I will continue to strategically look for long positions in the dollar index. Meaning to say, I will be looking to sell the other principal currency. Here we have the dollar index on the daily time frame. Okay, you can see Friday closed on a very strong note. Okay, so this could actually be the start. If the market take out 99.5, that would be the first break of structure. And of course, we have to contend with the 100. Once the market can safely close above 100, it will be on its way to 110 and then to 121. Okay, that would be ideally what I want to see. Now, corresponding, we look at the euro versus the dollar. Now, the euro versus dollar is actually a mirror image of the dollar index. Okay, here we can see that the dollar index has a three-wave down, very neat three-wave down. We also saw a very neat three-wave rally into the equality range of 119.17 to 121.27 with a high of 120.83. And this only happens this past week. Okay. And you can see how this single bar here, if you expand it, you go to your own platform, you look at this bar here on a weekly time frame. This is a classical reversal pattern, and it also increased my confidence for the call, whereby I think the principal currency, whether it is sterling versus the dollar, whether it is all the other currencies against the dollar, they may all reverse at the same time. Okay, so I'm using the euro dollar as the prime example. So if this being the case, a three-way pullback here may actually gun for 82 cents or at least 83 cents to the dollar. Okay, so there's huge potential because the last time we saw this price is at 118.50. So it's a long way down, 1,000 pips at least. Okay, so if you are able to also concur with this assessment, then there's a lot of potential uh, uh, in this trade here. So increasingly, I have not been looking at currency for quite many months. Okay, purely because I don't see anything worth doing, but that may change in the coming week going forward. Okay. So this is the lower time frame. This is the daily time frame. On Friday, it closed on a very weak note after trading to a I would say 3 years high at 120.83. Okay, so this will set the stage for lower prices. If the market breaks below 114.70, which is this pivot line here, then that will be the confirmation that any bounce, I'll be looking for level to sell. Okay, so this will be my game plan going forward, which is to look for reversal in equity markets index and to look for reversal in the dollar going higher. Okay,